Hey, hey, hey. Welcome back to another episode of Friday Foods and Facts with your favorite guy, me. So today I have one here, a guest of mine. It's a realtor partner that I work with. His name is Tramar Clay. And so we are just going to have a conversation, about the industry and what's going on in it and, common things that we're seeing, questions that we're hearing, and what we can do to help you out. So, with that being said, above you'll be able to find my contact information. Below you'll be able to find his. And we do service, the Metro Detroit area. So, tell me a little bit more about what you would like the people to know about you, Tramar.
All right, Kendall. My name is Tramar. I'm with National Realty Center here in Northfield, Michigan. I work with a lot of first-time home buyers. Also work in the Detroit area pretty heavy. I do a lot of investment properties, flips, a lot of first-time home buyers, as I said earlier, and first-time sellers as well. Sometimes, you have people that buy property and then they need to sell it. So I'm overall do a lot of that in the industry here.
Awesome, awesome. That sounds good. A lot of times people always talk about the first time buyer, but they never consider the first time seller, right? Like they need to
Right,
know what to
right,
do too. So that's cool that you help out with that approach.
right.
So well, let's dive into it, man. So what are some things that you're hearing right now? What's
Well,
what's
what everybody's worried about right now, Kendall, is the interest rates and everything of that nature. I'm talking to a lot of first-time home buyers that's decided to continue to stay renting versus buying. And me personally, I think that it will be cheaper for a person to buy a property versus renting a property because even though the market is cooling off, rental market is extremely high right now.
right, right. I know I totally agree with you on that. And to that regard, I know a lot of people are like, well, the interest rates are so high, I don't know if I want to buy right now. Well, I mean, if you look at it, like let's say your basic interest rate right around now is like 7%, right? Well, that's 7% interest, but
Right,
that's leading towards home ownership. If you're
right,
renting, that's 100% interest. So it's like, which one's better, right?
right,
I would think that the 7% is going to behoove you better than the 100% because at least you're making ground, and in the right direction. And then I do have programs available to me that can actually help borrowers get into a property at interest rates that are below the market right now. So that's definitely something to take into consideration, because like this interest rate scenario is only going to last for so long, right? Like eventually
right.
we are going to get out of inflation. Things are going to go back to a more normal market, and we should see rates come down a little bit, which would make it a lot more beneficial for people. So I mean, if you buy now, we can definitely refinance you in the future to help you lower your interest rate. And then there's other program options that can help you lower the interest rate as well. And we can talk a little bit about more of that in depth. If you give us a call or reach out to us at the information above or below, and we can see how we can help your specific scenario. Um, Now, like, what are you seeing like as far as inventory is concerned right now?
Well, inventory, I'm starting to see, to be honest with you, I'm starting to see more inventory on the market.
Okay,
I
that's
think
good.
personally, I'm in the Detroit market, so I'm starting to see a lot of homes still on the market with price reductions. I would like to be honest with you. I know for
Hmm.
sellers it's kind of disappointing, but I'm seeing a lot of price reduction from last year. So the market is cooling off, and it should be a little bit easier for a buyer to purchase a property now. That's what I'm thinking.
Okay, that's good to know because like I know I was looking at it from a statistical standpoint of just like typically this time of year, and there's less activity generally speaking because people don't want to upend themselves like in the middle of a first semester of a school year and whatnot. So like it's good to know that inventory is moving upwards. And then I believe that the raise in interest rates is kind of like a price correction to the market, and that's why we're kind of seeing some of the values come down a little bit. So it does create more opportunities for the buyers because there's less competition. So I am inclined to say that right now we're looking into a buyer's market, and I don't think that people should hold off. Like, if this is something that you want to do, I definitely believe that we should take advantage of the time right now and get
Right,
with someone like myself to get you pre-qualified, and then I'll get you over to Trey, who can get you out there
right,
and get you around seeing these properties, swiftly, and get your offer made and get it accepted. And just to kind of speak to that point, like you and I have a client that we started working with at the beginning of this week, 2 days ago, right?
right,
And
right,
you met him in front of a property. He
right.
was interested in it. You took him in to see it. You linked him up with me. I was able to get him pre-approved, and then you guys are making an offer today, and
Awesome.
that we are highly sure that it's going to be accepted. So
Right. And this
things
house
happen
has
in
been
a
on the
matter of four
market.
days.
And this particular house has been on the market for only like 6 or 7 days, and they didn't get the activity that they need. And it's in a desirable neighborhood as well. So
Yeah.
that
See,
that
so
shows that shows me that the market is taking a change, and
mhm.
the buyer is becoming a buyer's market. I mean, last year compared around this time, we didn't have a problem converting our clientele that we shared together, but it was some of our clients had to come out of extra money and different things of that nature just to get the property. So I think it now in this market is cooling completely off, and it's really firing up for the buyers. So it shouldn't be a problem for a buyer to purchase the property.
That definitely sounds good. And speaking of this market, the way things currently are right now with interest rates, a lot of scenarios are going to wind up having points, which are a percentage of the loan amount. 1 point is equal to 1% of the loan amount, and so that is an added cost. And I do know that people are reducing the prices of the properties that they have, but maybe we could look at keeping the prices the same, and maybe the seller giving some what's called concessions or the proceeds from their sales to help the buyers pay those points, to help keep their closing down,
Right.
their
And
closing costs down. And I
and
feel like
and
that's
the
what
buyers have that power. The buyers have that power. So if they're working with a real estate agent, they have that power right now to negotiate and make those calls because of the
mhm.
inventory.
Yeah, and I feel like it's still a win for everybody. Like, it
Right.
helps the buyer closing cost wise. It helps the seller because they don't have to reduce their price, so they're still being able to sell the house for their top dollar,
Dollars, right.
which still gets them the maximum amount of their funds. And then it also helps the real estate agents who are working hard to help people come together so that we can make this transaction complete.
Right.
And all their hard efforts, aren't for loss. Being that they have to lose out on some of their pay because the price has to come down. So, I feel like all in all, everybody wins in that scenario, and it's definitely something that should be considered in today's market.
Correct. Correct. Now,
Um,
another thing I'm hearing is
mhm.
I'm hearing what's the credit score for a first time home buyer? When we work together, we are definitely confidential, and I don't ask you any of my clients' financial details, and you don't share that
Right.
information with me. And we just do that according to law and everything of that nature that goes with our industry. But what are the requirements for a first time home buyer? I know
So,
everybody is different.
right. So each program has their different base requirements. I have some programs that go as low as a 580 credit score. Uh, and then with the VA, there technically actually isn't a credit score requirement. They look at
Wow.
other factors and see how those affect the overall scenario, and then they make their decision based upon that information of whether or not you're going to be approved for that. So, typically what's available to most borrowers, I can get in as low as 580 credit score, or for those that are eligible for veterans VA loans, which will either be veteran, an active duty service member, or the spouse of a veteran. a deceased veteran. Those would be eligible parties that could use the VA program, which is cool because it doesn't have a down payment requirement either. So, we have that to work with. But along the lines of credit score, uh, obviously the higher the better, right? And so
Right.
in today's market, we definitely want to do what we can to approach increasing your credit score and making that better so that when it comes time to make an offer and to lock in your interest rate, we can give you the best available interest that's available to you at that time. So, one of the things that I know heavily affects credit is a consistency of payment, making sure that you're making your payments on time. I
Okay.
believe that's actually the largest factor. It's about like 35% of your credit score.
Mhm.
And then another large chunk of like a 30% is keeping your revolving balances low. So if you can just do those two things, it should definitely help to keep your score on the higher end, which will also keep you out of detrimental credit, like late payments, collections, judgments, liens, so on and so forth. So things like that that'll take a hit to your credit and it'll make it harder for you to qualify. So, just keep that information in mind as you guys are looking to approach the market and to get into the real estate game, that credit is king. I mean, at the end of the day, really cash is king, but not everybody has hundreds of thousands of dollars to throw down on something to obtain it in cash. So the very next best thing is credit. And lenders are going to look at your credit to see how capable you are of paying them back with your consistency and history, your balances, and it's going to make them have a certain level of comfort, and that's going to help generate a certain interest rate. So the better that you are at that, the better that it'll benefit you in the future.
Okay. And then
So
what about self-employed? What about
yeah.
self-employed? If I don't file taxes, can I still get a mortgage? Is it a way that you guys can give me a mortgage? If I'm self-employed, hairdresser, barbers, realtors, landscapers, people that's just entrepreneurs. Last year
Mhm.
a lot of entrepreneurs were created. Can those people
Yeah.
still qualify for a mortgage, a loan? Can they still buy a house? I guess that's my question.
So typically speaking, if you don't file your tax returns, generally the answer is no, because for your standard agency product, there needs to be a way to verify your income. And a lot of the times that is based off of a tax transcript that's received back from the IRS stating, hey, I've reported this income. And then the IRS is saying, hey, okay, we've received this income. We've received documentation showing that they've made this income. The information lines up. We believe that, it's legitimate, and then the lenders can use that.
Okay.
Being that the market has changed some, with this pandemic, there have been some new programs that have arisen. And I kind of spoke about that last week, that as this market continues to change, you're going to start to see new programs coming up. And some of those programs now don't necessarily require that you have your tax returns filed. They just want to see liquidity of business and
Okay.
what's called reserves. So reserves are the principal, interest, taxes, and insurance, which is the full mortgage payment. So let's say, for instance, if your full mortgage payment, including taxes and insurance, was $1,000, 1 month's reserves would be $1,000. Well, with programs like these newer programs, typically they want to see you put down 20% into the transaction. That helps to mitigate risk. And then they also want to see that you have 12 months reserves. And that helps to mitigate risk because that lets the investor know that, hey, if something were to happen, they're not, one, going to just walk away from this house because they put 20% down into the home.
Right.
So, I mean, like, who's really willing to walk away from 20% of a purchase price? And if we're looking at $100,000 property, and I like to use that number because it's a whole number, it's 100, right? So if
Right.
we're looking at that, 20% of that is $20,000. Like, are you really going to walk away from $20,000? I
No.
don't think so. And then the other mitigating factor is you have 12 months reserves. So if your business were to, God forbid, go belly up, you could afford to make the payment on that structure for 12 months because you have the funds there available. You showed us that you have the money, we verified it. And so we know then that you can make your payment, which then helps, again, mitigate the risk, make the lender feel more comfortable, make it, something that they're willing to lend on, and that program does have credit score requirements. The higher the credit score, the more it kind of lessens the restrictions. But that's something that we'll take a look at when you reach out to us, and we'll look at your specific scenario and see how we can apply that to your current situation to make it successful.
Okay. Okay, that makes sense. That makes sense. And I guess my last question for you is, a client, that's all they got to do is just hit you up, right? And
Yeah,
you can
yeah.
everything and come up with a game plan to get them at least started or get them set up so that they can make a purchase in the near
Right,
future.
right. They can either call me or they can call you. Both of our contact information is listed here above or below.
Okay.
I've listed my website and email as well up top. You can go on the website and and apply directly. It'll give you the ability to fill in your information, upload documents. All that will come directly to me on a secured portal, so you don't have to worry about anyone obtaining your information illegally. Also, it gives you the option to share. If you know someone else that's looking to do an application, you can share the information there. Being that you and I partner together, I know that if they reach out to you, I'll make contact with that client in the near future,
Right.
and we'll be looking to get them taken care of. But there's multiple avenues of how they can reach you or me to become successful. And so I I want to make sure that everyone does see the contact information above and below. Take it down. It's important. We're not sloughs out here, so we're gonna do what we need to do to get
Right.
you where you need to be as
Right.
quickly as possible. And we have other tools at our disposal. Like if you haven't filed tax returns and you need to get tax returns filed, we have access to CPAs that can help you out. Or if you need help improving your credit score, we have teams of people that help people improve their credit. So don't hesitate to reach out to us, and I'm sure we'll have those partners on here later with us, and next episodes. But yeah, don't hesitate to reach out to us. We're here to help you out. We want you to be successful. We love to help people, and helping home ownership is like a major goal, especially amongst American society. And that's one of the reasons why I got into this business. And I know it's the same for Trey.
Yeah.
And
Same.
so we love to be a part of that. We've helped many home buyers, first time home buyers, together, just over the past 5 years. So
Right.
let you be the next one. Reach out to us. We'll take great care of you. And as always, it's been another great episode of Friday Foods and Facts. You can catch us here next Friday. We'll continue this conversation. If you have any further questions or anything like that you need help with, our direct information is above and below. You can also leave a comment. You can message us directly on Facebook. You can email. Also, catch us on 107.5 next Sunday around 12 noon, 12:10.
Yeah, about
And we'll be
12.
having another in-depth conversation. Excuse me, got the hiccups there. Just about the mortgage market and what we can do to help in the Metro Detroit area. So, this will be available online for people to just go back and rewatch. You can catch us on the radio. And until then, you have a great weekend. Enjoy the longer weekend for those that do have Monday off as a result of the federal holiday. And we will talk to you next week.
Next week.
Thanks
Sounds
again,
good.
Trey, and
All right.
I'll see
Thank
you
you.
next week.
All right. Thank you, Kyndal.